I want to go to Eddie Ghabour on all of this. Eddie, the Key Advisors Group co-owner, by the way. I found it interesting that the Fed chairman went to the lengths he did to say that they would not be affected by whatever the external political calculations are. I'm paraphrasing here, but I assume that was in response to federal spending and all of this and the back and forth, Republicans versus Democrats on where we go here. But this is not the first time he's done that. What do you make of that?
No, and I think one thing the Fed is trying to make crystal clear is that they are serious about getting inflation down and staying extremely hawkish. I believe the last thing they wanted to see is what happened after the July meeting when they raised rates and asset prices went through the roof. That's the last thing they want to happen. They're trying to create this environment where asset prices are going down and growth is slowing down. So this is why they're putting that hard line and stance so that way the market doesn't misinterpret where they are. Now, I do think ultimately this economy and markets are going to force them to have to pivot sometime next year, but they're hell-bent on slowing this economy down. I think personally, with all due respect, that it's a mistake with how aggressive they are raising rates and doing QT at the same time. We've never seen anything like this of this magnitude happening this fast, and my biggest concern is they're going to shock the financial system by doing that.
You know, I was intrigued, Eddie, by Lila Brennan's comments, the Fed vice chair, and she said all the right things about we're going to remain vigilant, we're going to keep hiking rates, I'm paraphrasing here again, to get the message across the Fed is going to be vigilant on inflation. But she did caution near the end of those remarks that they're not, immune to this talk, they could overdo it, that they're very cognizant of the risks to the economy, and they'll do their best. Again, oversimplifying maybe what she said, not to go too far. But that's the big conundrum for the markets. They think the Fed will go too far, right?
Yeah, because traditionally speaking, they have. And again, I would argue they've already gone too far. They haven't given the economy time to absorb these rate hikes. It takes months for this tightening to go into the economy. So they continue to tighten and tighten and tighten while things are already slowing down is when they overdo it. And that's the position that they're in right now, again, in my opinion. But they're definitely going to raise rates in September. We'll have to see what they do the rest of the year. But the thing I'm watching more closely is the Fed balance sheet. If they stick with that $90+ billion a month, in my opinion, that's going to be more problematic to the debt markets than the actual raising of interest rates. So credit is already tightening. Lenders are getting tighter with their lending standards as well, too. And that just makes the situation even worse from an overall economic standpoint, which is why we think we are going to be in a recession next year for sure.
So all of that selling of Treasury securities from bills to notes to bonds, and they've indicated they're going to pick that up. Obviously, that increases the supply of all of this out on the market and could drive interest rates up still further, right?
That's exactly right. And look at how the bond market's reacting today. We do think that the bond market is going to continue to go up on rates as they flood the system with supply, to your point. So that's going to cause even more problems for margins because, look, the entire world runs on credit, whether we like it or not. And when you raise the cost of capital for businesses and families, whether it's mortgages or any type of debt, that is something that's going to hurt the economy, hurt margins, and earnings reports are going to have to get revised down if they continue on this path.
No, that's a very good point, Eddie. We're so focused on rate hikes and all that we don't look at something that could have a bigger impact on those rates, just dumping all these securities out on the market and seeing what happens with that. Eddie, I always learn a lot. Thank you, my friend.
Thank you.